What up? It's your boy E White. We're going over these markets for today. All right, so I'm just going to look at a couple of the strategies that we be using, which is basically the Fibonacci extension retracement tool. We're going to see if we saw any opportunities. All right, I just got out of this trade. We didn't get all the way down to this last extension, but of course we hit the first one, which is fine. And all I did was just measure this impulse move right here and got the downside targets. So I do it in real time again so you guys can see what it looks like. All right, we take it from here, take it there at the time, and voila, boom. But basically both targets hit on that. Now, let's look at doing a fib retracement. All right, so we had this move happen at 3 o'clock in the morning for the most part. And we got pushed up here about 9:15, and then we started to make our correction to come back down. All right, and now we can measure that impulsive move, and we clearly see we crossed 23%. Then we came back across 23%, and we went down to our golden ratio. All right, so that would have been a nice little move. If we could have got entry to come down here to 17 pips. If we would have rolled it all the way down for whatever reason, it's 34 pips. All right, so this was a pretty successful day with dealing with this particular trading pair. And this is on a 5-minute chart. So I do a couple of them on higher time frames as well, too. All right, we're on the Euro USD. All right, let's look. We got to move down. And we crossed what? 23%. Of course, we came back down. Retested right there. All right, we pushed. We also had a double bottom. You know how we as contrarians, we trade to the neckline. We do not go to the target. So this would have been a success right there. And of course, we're trying to get back up here to the 61%. So we're going to see if this could actually get us up to this point as well too. But if not, anybody would have took this trade. I mean, you're in profit regardless. So you could put a protective stop loss in place to protect based off you entering in on this on these pullbacks back up here. All right, so this is considered a success as well too. When was this? This was last. Hold on. This was this morning. I'm on 5 minute. I'm sorry. All right, so we got this top. Let's drop. We can measure that impulse. Bam. Target 1, 2, hit. Done for the day. Out. That's the Euro USD. Let's go to the next one. All right, on Canadian dollar, Japanese yen, I did have this zone drawn up as a supply zone. Price did shoot back up into this area. All right, so that's pretty good. Once again, we can do a retracement level. All right, crossed over on 23, came back below, look for entry, ride it back to 61. You don't have to go to the 61. Of course, you can go to different levels. But, of course, if you would have saw the supply zone, you could have actually took the trade into the supply zone. So this was a pretty good one as well, too. All right, so we find some entry point back up in this area. It's 41 pips. Not bad. Pretty good. So that was a good one as well, too. All right, if you want to, you can measure this little impulse, all right, for the upside. And you can measure two. You can do, what I mean by two is you can do a bullish and a bearish one. So you can know, I'm taking it to this level. So you can know what it would be if it breaks to the downside. All right, so both of these targets were hit based off of that. If we were to push even higher, all right, the third one will be on. And of course, if we change some form of trend and behavior, this will be it, and that won't be it for the most part. But we'll have to see on a higher time frame exactly what's happening. All right, so here we go. If we go ahead and crunch this down, we see we have these levels. Let's go ahead and take these all off, and then I can do a fib retracement for this big, huge move I meant. Let's take it down right here. All right, so we barely crossed over on the 23. We back below it, so we still could see some pressure that come up, but we're really in a downtrend, so you really want to be careful on that one. But if we can get to here, that could be there. Let's look at what we got with our actual moving averages. All right, so we are below on all three moving averages. What we need to see is we need to see price close above all three to be really, really strong and competent of that. But mainly this 200, we really need to get above this 200 because 200 really represents whether or not it's a healthy, strong, bullish. If it's above, if price is above. So that is this is the 20, 50, and 200 moving average I have on the screen. All right. Let's go to the next one. All right, we got SPY. All right, and if we look over here, we got SPX. All right, and you'll notice that 69% of the time were short and only 31% were long. It gives us a contrarian signal to look for buying pressure going into upside. I was able to buy this at this junction right here. I was able to put in a buy order. We got this little pop here. Look left, got out there, didn't stay in it long. Just a simple $200 was made off of that. Taking some option contracts out. But you also can look at different things here. All right, once again, what do we looking for the 23? We got crossed over 23, came back below. You can find entry, but I was not in the market at the time yesterday looking at this, so this wasn't accounted for me. But I did see this pull back to this area, and I was looking for that to take it on to the top. Y'all clearly see the levels that have been hit. You can also measure this. You can get that. And bam. So both of these targets would have been hit. We're looking to try to see if we get to the third. That could happen. Of course, I don't expect that to happen today, but hey, anything can happen. But definitely for the rest of the week, we definitely could fight back up there. We did close this gap over here. So that was a gap. Close. Playing gaps is really lucrative as well, too. Typically, price try to cover those gaps. You see we had a gap right here. We gapped down and then we came back and recovered it. Right? So you see we had this big gap here as well too. And this is weird, right? But you had a gap within a gap. So the gap here and then the gap there. And you'll say, well, these gaps weren't filled. Yes, they were. This whole move right here filled both of these gaps. This gap and that gap, that gap. All right. So you need to know that whenever price jumps over, that means there's a lot of orders in this area. It did not get triggered. So price needs to come back and try to fill those orders. All right, let's go to the next one. All right, we got Euro JPY. Coming down to a downtrend, lower high. Lower low, lower high, lower low, lower high, lower low, lower high. Now we back up to this area right here, and then we got this nice little big pullback that's coming on right now. What we can do now, we definitely can take this, so we can measure this. Of course, we see we crossed 23 right there, came back, find entry point, get down here to 61. We got here. It could have been a trade. Like I said, I'm looking back right now, so don't see it. But yeah. So this still can shoot to the downside. Now, what you can do is you can go ahead and measure. And all this is on a 5-minute chart. So I still can measure this because this was an impulse and then it broke this level. So that can be a leg that can be measured. And based off that leg, this is where price is trying to get to. And so you possibly could try to, it's a 5-minute. You may not have a lot of pips to get there. It's 9. It's decent. Take a standard. It's maybe $10, $90 or so. But that's something to consider. All right. All right. So this could be, I feel like a little box area there where that price could come back and retest that area. This area here, which is essentially is nothing but a demand zone. All right, I want to see if price get back down to this demand zone. All right, But of course, by the time you watch this video, I mean, this trade would be over because we're on the 5 minute chart. Uh, but at least we can see if we can get there by the time you watch this video. All right, so let's go to the next one. All right, we're on a British pound, Japanese yen, we're on a 5 minute. Really in this consolidated zone. It's not really giving us much, but of course, there's a lot of extensions that's probably being hit here. It looks like this could be shaping up to be some type of head and shoulders pattern. Let's go and see what the sentiment look like. So 75% are short, 25% are long. But also look at this signal right here. It says mixed. Anytime it says mixed, you want to probably start leaning towards the most dominant, which would be the 75%. The reason why it may be as mixed is because you may have a mixture of also some big retail orders and institutional orders coming in and giving it conflicted data. So sometimes that's why it'll say mixed. But yeah, I mean, clearly, if you go back and you start looking at some of these waves that are coming down and you start measuring, you clearly see that it's a lot of extension points that's been hit. Of course, this will be the third one based off of that if this holds up. But you also have to factor in, this type of move right here as well too, because that could be considered. It is considered a bullish move. So if price would like to rally, this is an area you can get back to as well too. Normally, if you start seeing a lot of choppiness like this, probably try to go up to a higher time frame, maybe the 4 hour or the 1 hour. You start to see something else start to shape up, and it gives you a better snapshot of what's going on, and you'll be able to um, essentially set your um, support levels and resistance levels. All right, so we know price came down, shot up. We back down to this area, but this could be still an area of demand. Why? Because remember, we measure what whenever price breaks out of a particular zone or area, we know it's an imbalance. We know right here there's an imbalance came in. All right, price broke out, came back down, filled these orders and pushed to the upside, but we're back in this area, which means that this is a significant area where there's a lot of orders that's probably still sitting here, need to get filled. So we could see additional buying pressure coming out of this area. We've been in here for 3 candles, actually 4 right there. And right now we're having some resistance points at this junction, which right here too is considered a what supply zone. So a lot of people get mixed up with supply zones. They think it's just one area on the chart. It's like, nah, it's supply and demand all over the chart. Whenever price moves out of a particular zone, it had to be an imbalance. All right, price only moves sideways when there's not a strong imbalance in one area. So right here, there was an imbalance of sell orders. There weren't a lot of buyers right there, but right here there was a lot of buyers. All right, back to the previous area. Then it get back up here, it's a lot of sell, push back down. But if this can be broken and take it to the upside, that can happen. All right, and typically when you see an order like this, a pattern like this, what happens? You go over 75% short. There's a lot of people who anticipate in this thing to go short, but this is how you can get really, really wrecked because it looks like this too. Look at this. All right, it's a lot of people going short right here. Look, price just wiping them out. Okay, you see it right here. A lot of people, oh, it's going to go short. It's going to just keep pushing against them. So there's no difference up here. All right, there's nothing with the trend that really has, you know, said otherwise. We're still over the 200 period moving average. If anything, yeah, we could come back and test this, but at the same time, to be honest, your bias for what we've seen is still in the uptrend. Simple as that, right? Yeah, we got a minor little pullback. We can measure some of these. We could get back down in here, but right here, I'm really looking for buy opportunities, right? So I really probably would need to see this candle. We got 9 minutes left for those 4 hour, and then we get another 4 hour candle to form. We need to see this level really eliminated, to be honest, before you even really think about anything. But for right now, what we could do is we just draw a box here, and we know this is a zone that we need to focus on. And right now, inside of the zone, you can take a risk and you can start trying to trade this on lower time frame. But this box needs to be closed either above or below before we can even consider doing anything. So that's just my opinion on this one. This is the British pound, Japanese yen. Next. All right, this is the euro, Canadian dollar. All right, we had a nice little push up. We got a retest. We retested the previous area that was broken. Once again, this was a what? It's a demand. All right, it was going sideways, and then something broke it out. That means it was more orders here, and of course we got to sell back here. But we're testing this. I believe this is the 20 period moving average, the yellow, and I think the red is the 50, and of course the green is the 200. We're above all three. Price is reacting heavy off of this. So if anybody was trading this, they'd probably be looking for more what? Buying opportunities. We have 63% of short, 37% of long. Yeah, it do say mix, but at the same time, since all these other stuff is showing up, we still possibly could shoot higher. Of course, this is on a higher time frame, the 4 hour here. All right, so that target was hit. If anything, we may try to shoot and get this target, and it aligns back at this at this zone right here, which would be a supply zone. And we already went into this zone, but we could go deeper, so we could see how that will operate. But other than that, I'm not gonna keep y'all long. I just did a few of those. But anytime, just let me know in the comments of what you would want me to look at, like stocks or something else like that. In fact, I'll probably do another video today just going over certain stocks that may have hit, like, a double top, double bottom, and they have played out, or they look like they're on their way of playing out. All right, so hit the like button, subscribe. It's your boy E White. I'm out.